really what is happening today, because when these two went away, this one was still there, and they go, oh, nothing has changed. They're doing the same thing with the digital system. And it doesn't matter that cryptocurrencies seem to be in some kind of winter, blah, blah, blah. They haven't had their test yet. This may be it, it may not be it. I don't know yet. But what I do know is that regardless of how the public feels about it, the corporations are moving quite rapidly to build this infrastructure right in front of our faces, but we don't realize it because it's not visible yet. In the beginning, you had a $20 1-ounce gold coin, and then they came up with gold certificates because, wow, this is so much more convenient than this is. And it's got a little gold thing there. But at the same time that they did that, they did this, which is a Federal Reserve note, which is corporate debt.
Zang argues that modern monetary systems have moved away from anything physically backed and toward highly financialized forms of money. In this system, paper currency is not just money, but is closely tied to debt and credit creation. From her perspective, this shift has increased the influence of governments and large financial institutions, while reducing the role of tangible, asset-backed value. In this context, she describes gold as something much deeper than just a commodity or an investment. She sees it as a form of stored economic energy, meaning it carries the time, labor, and resources required to extract it from the earth. Once produced, that value doesn't disappear. Gold does not rot, break down, or become obsolete. It can be melted, reshaped, and reused in industries like technology or jewelry, yet it still retains its core value. Because of this durability, Zang views gold as a long-term store of wealth that can hold purchasing power across generations. From her point of view, gold is not just something that goes up or down in price, but a reference point that helps measure the strength or weakness of currencies and financial systems over time. Now we present the clips from the interview.
Some of the legislation here recently, but just curious in your
Clarity
thoughts.
Act. Yeah, it's whatever happens in a really short term piece is not to me as relevant as the overall trend. And so regardless of the laws being passed over here, look over here, they're building the whole infrastructure. So these laws will get passed, and look at how much money that these corporations are throwing at the government, those that are trying to get reelected. And it doesn't matter whether it's Democrats or Republicans, although Republicans have a huge, the amount of money that is coming from lobbyists from these corporations to have influence on the laws. This is not a government that is for the people, by the people, and for the people. Mm-hmm. This is a government, and it's been that way. So I'm not saying this administration. I'm saying government's job is to legalize the theft of the corporations. And when we converted freaking corporate debt into money, you don't believe me? Pull a bill out of your wallet. What does it say? It says it's a note. Well, what's a note? A note is a debt instrument. When they allowed that, this is just more of the same, giving the corporations more and more power. We have to take our power back. If we do, honestly, do you want Amazon in your brain with AI telling you what you're going to buy and what you're going to do and blah, 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 blah? That's what's coming if we allow it. Mm-hmm. And we have to allow it. We can stop it. We can say no. And that's what my fight is, to get sound money back in the system again. Because when it's redeemable, the public has the power. I don't like what you're doing, whoever is elected. Okay, give me my gold back. What gold does is it forces fiscal responsibility and puts limitations around them. What the digital economy does is it takes any limitations away, because right now in this current system that is debt-based, and that debt is so high, it doesn't matter whether it's governmental, corporate, or individual, that is simply not payable. But this next system that they have in mind, remember, what justifies money? When we were on the metal standard, it was based on how much could be pulled out of the ground. There was a finite. What did it cost to pull it out of the ground? And then that energy is held. So particularly with gold, since it's indestructible, all the energy and effort that went into pulling this out of the ground is stored right in this little coin right here. Stored energy. I could take this gold, melt it down, put it into jewelry form. Oh, well, this is probably closer, right? Put it into, or any other form, electronics, et cetera, et cetera. So this energy is stored. With the tokenization that you're referring to, that honestly is about bringing more capital into the banking system so that they can leverage more and they can gamble more, because that's what the whole thing has become, just a big, huge casino. But they're gambling with yours and my life. And that is not okay with me. You want to do it over here with what you've worked so hard to create? Rock and roll hoochie coo. That is entirely up to you.
According to Lynette Zang, rising gold prices are not simply about demand for a commodity, but may reflect deeper stress within fiat currency systems and a gradual loss of confidence in paper money. She explains that gold has historically acted as a quiet measure of currency strength rather than just a speculative asset. In her view, when gold trends upward over time, it often reflects the weakening purchasing power of fiat currencies instead of a sudden increase in gold's value. Zang also highlights an important distinction that many investors overlook: the difference between physical gold and silver versus paper-based contracts traded on financial markets. From this perspective, gold and silver are not just financial instruments, but essential components of the global economy. Gold plays a role in central banking, reserves, and wealth preservation, while silver is widely used across industries like electronics, solar energy, and advanced technologies. This gives both metals a dual identity, part investment, part real-world necessity. Please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this.
Gold and silver has been under some pressure recently and such. And so what are kind of some of your thoughts on this recent movement and the price measured in dollars?
Gosh, I have so many thoughts on it. But I will say that Wall Street has turned everything into a big speculation. So when we had that massive run up, that was speculative trading in there. Now we've got these mega IPOs coming out, and it looks like all the rest of the markets are struggling as perhaps entities are trying to accumulate some cash to go into these mega IPOs that are coming down the pike. But all of this and the level of volatility is really an indication of where we are and the breakdown in the global monetary system. Because you've got to keep in mind, a rising gold price is an indication of a failing currency. And they do use price action to get adoption or to push people away. If I had my druthers, then people would understand that what they're actually looking at are contracts, trading contracts. Because unlike things like stocks or bonds or currencies that are used in one area, gold is used in 33 different global sectors of the global economy. And silver is used in 36 different sectors of the global economy. And that, if I could help people understand that you cannot base your choices on manipulated contracts. Those are simply designed either for a pickup in cash, because that's their job. Banks make most of their money by trading, not by buying and holding. But for the individual, this is about maintaining your purchasing power, which is absolutely not what governments or central banks or corporations want you to do. Yeah. That was the whole plan that started this thing. And so when I'm looking at the price action, I absolutely know Bitcoin was allowed to run because they want adoption of the digital system. And the more that they can make things look normal or the same, that's their goal. I mean, they know how to do this. They even admit they know how to do this. In the beginning, you had a $20 1-ounce gold coin, and then they came up with gold certificates because, wow, this is so much more convenient than this is. And it's got a little gold thing there. But at the same time that they did that, they did this, which is a Federal Reserve note, which is corporate debt. And look at how much alike the two bills look. And they rode together for 20 years. They were used in the economy interchangeably because they all had a stated value. So people got used to it and they put value in dollars. But what they don't realize historically, that everything was valued in terms of ounces of gold and silver historically, not in terms of dollars. Dollar has no value because it has market in one place. So really, what is happening today, because when these two went away, this one was still there, and they go, oh, nothing has changed. They're doing the same thing with the digital system. And it doesn't matter that cryptocurrencies seem to be in some kind of winter, blah, blah, blah. They haven't had their test yet. This may be it, it may not be it. I don't know yet. But what I do know is that regardless of how the public feels about it, the corporations are moving quite rapidly to build this infrastructure right in front of our faces, but we don't realize it because it's not visible yet. And when I look at how they set the system up without the public realizing it, after they took the power away, that's really when they flooded the system, when there was nothing that you or I could do about it. And that's what's happening today. This is not different. So what's happening in the metals markets? Number one, what you're looking at is you are not looking at the whole market. You're looking at the paper or the digital market. And that is cheaply and easily manipulated and has been forever.
Lynette Zang argues that this connection between corporations and government has become so strong that money itself is now closely tied to debt. She points out that modern paper currency is not backed by physical assets anymore, but is instead created through debt systems. In her words, this gives large corporations and financial powers more influence over how the system works, while ordinary people have less direct control. She believes this is why inflation and rising costs feel constant and unavoidable, because the system itself is designed around expanding debt. She then uses gold as a contrast to explain what sound money means. According to her, gold represents real stored value because it is tied to physical effort and energy. It takes time, labor, and resources to extract it from the earth, and once it is created, that value remains locked inside it. Unlike digital money or paper notes, gold cannot be created out of nothing. It can only be mined through real work, which is why she describes it as stored energy in physical form. Zhang also emphasizes how modern systems have replaced this idea of physical value with convenience and abstraction. She notes that digital money and paper currency are easier to use, but that convenience comes with a cost. People lose sight of what money actually represents.